This Week in Startups is brought to you by LinkedIn. A business is only as strong as its people, and every hire matters. Go to linkedin.com/twist and get a $50 credit toward your first job post. Kruze Consulting, a leading tax CPA who works exclusively with funded startups. Go to cruzeconsulting.com/twist and get a free tax consultation and R&D tax credit white paper. And Capterra, the leading free online resource to find your best software solutions. Visit capterra.com/twist for free to find the right tools to make 2019 the year for your business.
Hey everybody, welcome to This Week in Startups. I'm your host, Jason Calacanis. We do this show twice a week, and we're doing so for just over 9 years. Can you believe it? This year will be the 10th year we've been doing This Week in Startups. We started when podcasting, which very few of you young people know, podcasting, when it started, the reason they call it podcasting was because you used to take your iPod. Now, for those of you who don't know, an iPod was a device that came before the iPhone. And all it did, it had a little click wheel, all it did was play MP3s. There were no apps. There was no internet connection. And you'd plug in your iPod and you'd have a podcatcher. And the podcatcher, you put an RSS feed in and it would download your podcasts, put them in an album, and then you'd listen to them during the day. You'd come home. It would remove the ones you'd listen to and put new ones on. That's the origin story of podcasting that many of you don't know. But since that time, podcasting has exploded. And now 150,000 people listening to the podcast. Thanks to everybody at home for tuning in and for spreading the good word of This Week in Startups. If you want to be on the show, go ahead and do something important in the world, and we'll find you. Do not pitch us. That's what I always tell everybody. Today's our news roundtable. That's when we go and we talk about what's in the news of startups and technology. With me for the first time is an old friend, Mick from Sydney. Mm-hmm. You run Pollinizer.
Yep.
Liubinskas.
Liubinskas. Yeah.
Liubinskas. Liubinskas.
Like Calacanis.
Calacanis. Yeah, you got it. Well, it's Calacanis.
Nis.
Liubinskas.
Yeah, too.
Liubinskas.
How you doing?
I'm great. Thanks for coming on the pod. And I met you at CBIT 12 years ago in Sydney.
Yeah. I was following your presentation. I was the comic relief after you. And
I watched your presentation. I thought the opposite. I was like, wow, this guy's got substance.
Yeah, thanks. That was good fun.
12 years ago, you were trying to help startups figure out how to grow.
In Australia, it was a fairly small scene back then. Atlassian was still a small company.
Yeah.
But it's grown and grown and grown exponential. So, and you've been back again last year.
Yeah, we did Launch Festival Sydney.
Yeah.
Went great. For those of you listening, go to launchfestivalsydney.com and you can sign up for one of the first 1,000 founder tickets we give away for free. If you want to come to dinners and stuff like that, you got to buy a ticket because there's a really serious hard cost to that. But it's June 18th and 19th. Yeah, it's grown pretty incredibly. We've invested in 3 companies after last year.
It'd be more this year.
We'll see. I'm going to have the 2 companies that just finished the accelerator open the conference each day.
Okay.
Jackie taking an editorial note, and they're going to explain their experience coming to America, doing the thing, et cetera, et cetera. And of course, you are, people know you from Pollinizer. Is that still going, or?
Yeah, Pollinizer's still going. We invested, it was an early incubator. So we've invested all the capital and just writing out the companies now. And then I moved and co-founded Muridi, which was the Telstra-backed accelerator.
Right.
I'm also a co-founding investor of StartMate, which is the other accelerator out of Australia, which has done great stuff with BugCrowd and some other big companies. So doing well. But at the moment, I work with a couple of early stage companies here in the Valley and overseas.
Are you living here now?
Yeah.
Oh, that's great.
Been living here for 2 years.
And you're doing this book, which I just backed.
You did. You bought 10 copies, 11 copies.
Yeah.
Thanks.
Well, I saw it and I just thought, this is something that needs to exist in the world.
Yeah.
She's building a robot. A young woman learns what it takes to make a friend by Mick Liubinskas.
Yeah.
Liubinskas.
Yeah.
Liubinskas.
Yeah. So we'll get there.
When is it coming out?
So it's pre-order now. It's a crowdfunding campaign.
Okay.
And
how do you find it? It's on some website for book.
If you just Google "she's building a robot," you'll get to it. But it's a crowdfunding campaign purely for authors called Publishizer.
Publishizer, yeah.
Yeah, and basically, when you hit 100, they send it out to 50 publishers. When you hit 250, they send it out to another 100. And when you hit 500, they send it out to all the publishers in the world. And I've hit 410 in the first 3 days. So.
410 sold copies.
Yeah, pre-sold copies.
That's
so
pretty
thank
great.
you for your support, Jason. It was awesome.
Of course. Yeah, no. I tweeted it as well. Hopefully some of you saw it and you go buy it. What's the premise of the book? She's building a robot. Is it nonfiction, fiction?
Fiction. 10 to 14. It's aimed at 10 to 14-year-old girls. So basically, a teenage girl gets dared into entering the school robot building competition, and she builds a team.
Okay, spoiler alert. No spoilers.
Has to put the robot together. Right. Has to work out leadership and all the engineering side. So,
what was your inspiration?
I've got 2 daughters, but women in tech, I do a lot of work to try to support women in tech, and they kept telling me that as teenagers, girls often have social pressure because it's not a cool, popular thing to get into technology.
Right.
And I wanted to change it and create a few strong female characters that they could relate to.
All right. Good on you, son.
Yeah.
Well done.
Cheers.
Also with us, after massive popular crypto dipshit insanity, Pomp is here.
People are excited about this.
They're very excited for the crossover episode, 2 universes. It's like a Marvel and DC special. Superman and Wolverine.
The marketing of crypto dipshit was pretty good.
That's pretty good.
I'll give it to you.
I didn't call you crypto dipshit.
No. But when I saw the website, I was like, all right, he's all in on it. I'm
all in on this. But for people who don't know, Anthony Pompliano, I got that right. I know that because I grew up next to Bensonhurst, so I knew a lot of Pomplianos and a lot of people with vowels on the end of their last name. People call you Pomp. They call you Tony?
My father's name is Tony. So
you're Anthony.
Yeah, so I still get the
Tony
the
Jr.?
Anthony treatment.
I get the Anthony treatment. All right. Now, you are long imaginary currency. We know that.
I am.
You are long cryptocurrency. I'm being facetious. We started already. But you have an index fund. Explain what you do for a living other than spar on Twitter about crypto.
Yeah, so we've got an asset management firm, Morgan Creek Digital. We manage capital for institutions, venture fund, index fund, et cetera, all based on this premise that I believe every stock, bond, currency, and commodity will be digital in the future.
Sure.
And on top of that, all of this digital currency, crypto, blockchain stuff is really just laying the foundation for a lot of automation in the future.
Got it.
And so that's the 2 premises. Go to the institution, say, hey, don't go crazy and speculate and put 10% of your assets, but you should have, 10, 25 basis points, kind of asymmetric return profile. Let's get you in with a manager that's, RIA, BD, et cetera. We do it a professional way, and you don't have to go to your board and say, hey, I just went and bought the imaginary currency. We can actually go invest
and put it on a zip drive or a thumb drive or whatever. I mean, custodian.
Huge issue.
I guess they call that the custodial issue. Is a big issue because people have lost Bitcoin and this kind of
For
stuff.
Sure.
And you
can lose it in multiple ways. You can lose it on exchanges. You can lose it self-custody. I mean, there's a whole bunch of things that can happen. Yeah.
All right. Well, let's talk. We'll start off with this because it has been a heck of a year. Bitcoin topped out at what, like 19,000 a year ago, almost exactly.
I think we almost hit 20,000 on some exchanges, but yeah, 20,000.
20,000. It's been as low recently as 3,200.
Yep, hit right around 3,200, sitting at like 35 now.
35 right now. It has been, even though that is a tremendous, obvious ramp up and ramp down, it has been particularly stable. Is this the floor?
So it's...
And how do you think about that?
Yeah, so it's nearly impossible to call the floor. I think there's 3 data points that are important here. So one is Bitcoin was more stable than the S&P 500, NASDAQ, and Dow for an entire month last year, right?
Okay.
Which is, again, it's 1 month out of 12, and it's only happened one time ever, but still interesting that an asset we think of as so volatile was actually more stable than public equities.
Was that during the crazy volatile month of December?
Not during December. I think it was October.
Got it.
So,
okay.
but still, there was 20% drawdown in the public markets, right, and all that kind of stuff. So I think that's one piece. 2 is if you look at Amazon, which today we think of as this great, really powerful company.
Sure.
Over the last 25, 30 years, it has drawn down 90% twice. And then the more interesting stat is the average drawdown per year is about 30%. So each year, Amazon draws down on average 30%.
When you say draw down?
Price. So
the price comes down 30%.
From the annual high,
got it.
It draws down 30%, right, on average.
Okay,
and
so that's the typical range for
an Amazon, right?
For an Amazon.
And again, that doesn't mean that Amazon's a bad investment. It's just there's more volatility than I think we think of because we tend to look at 2, 5, 10-year time periods where Amazon's just gone up and to the right?
Got it.
Now, if you look at Bitcoin specifically, it's gone through these bull and bear markets multiple times, and each time the floor of the bear market is higher than the last one. And so you kind of continue to get this price appreciation if you just look at the floors. Where's the floor now? Assets drawn down 80, 85%. Could it go to 90, 95?
Sure.
Do we already hit it? I tend to think that you've already drawn down and kind of experienced the majority of the drawdown. And so I look at it, do you think it's going to be worth more 5 years from now? I do. So probably a good time to be interested in it.
Got it. Mick, what's your take on Bitcoin specifically and this, because you've been in the game like me for a while, the startup game, when you see the technology get that hyped up, you knew it was hype. I'm assuming like I did, like, well, this is just ridiculous because the people who are talking about it are people who have no idea about the fourth quarter last year was literally people coming up to us who have no idea about technology or startups saying, how do I get in on it? That's a bad sign.
Yep.
So you probably saw it coming. Did you see the fall coming?
I was lucky enough that someone who I've followed a number of years bought some Bitcoin about 8 years ago, and I bought a bit and made some money. But the things I think about is what out of the total value of Bitcoin, how much of it is actually utilized. So how much other than just sitting on thumb drives, how much is utilized? There used to be cafes where you could buy a coffee with it, and I'm sure those cafes have done very, very well. But
if they hold.
If they hold. But if how much of it is actually utilized for either trading, for commerce, for other than just sitting around being a financial instrument. So then there's the obvious interplay with blockchain. So a lot of people trying to tie the two together. And my view is you've got two very, very complex technologies. Both are platforms, and I think both are going to take 10 years to form to be fundamentally useful to end customers. And that means I think we've got a long time to go before it's normal, and then we stop just seeing hype growth and actually see just regular market growth. Because Amazon might drop and foreign exchange might drop, but fundamentally they're still useful financial instruments.
Anthony, how much has been bought? How much cryptocurrency? Is there any way to know how much cash was spent buying cryptocurrency? Because we know the market caps, but that obviously people mine the currency and are holding what they mined. So we don't actually know how much cash actually went in.
So I think there's two aspects here. One is I agree if you think of use cases as Jason's a store, I go and I want to actually transact with him. Another thing that's interesting about Bitcoin, though, is holding is a use case in the sense of if you're using it as a store of value. Now, there's a lot of questions as to how do you measure that, how accurate is it, et cetera. And I think
like
that leads...
gold?
It's kind of like gold, right? And so I think that leads to Jason's question of, okay, so let's say that some people are doing that. It's hard to tell how many. How much fiat currency went into the system, right? And the answer is we don't know. It's very, very hard. It's just very hard because the exchanges are so fragmented, et cetera. What the stat that blows my mind is last year, $410 billion was settled on chain. So this is an exchange traded volume. It's not the speculating, and that comes out to $3 to $4 billion right now is settled on chain on a daily basis. So think of that as kind of daily transaction volume.
On blockchain or all cryptos?
Just Bitcoin.
Just Bitcoin.
Just Bitcoin.
Wow. Yeah.
And so you compare that to MasterCard at 11.
If that is the three of us being early hodlers and round robining it, which a lot of people have claimed.
Yep. Definitely happening on exchanges. Wash trading for sure happening on some exchanges.
They call it wash trading. Yeah. Okay. When we get back from this, I want to know why there is no use case that we've seen at scale besides a store of value when we get back on This Week in Startups. And if there is one, what will it be? What's the number one that you'll think will break out in terms of consumers and businesses? I just want to take a moment to tell you exactly how brutal, how hard, how life-crushing it is to try to hire somebody today, especially talented people. We have record low unemployment, you know that. But you also know that in the startup business, tech business, it's a dogfight. And you're out there trying to find talent, and it's not easy. And the best place for you to go to find the greatest talent out there is LinkedIn. Everybody knows that because we're all on LinkedIn. And hundreds of thousands of businesses have posted a job to LinkedIn over the past year. So people are now, 22 million of them, in fact, are viewing and applying jobs on LinkedIn. Wait for it. Not every year, every week. That's right, 22 million professionals. And what's really important about these is that you get passive searches. What's a passive job searcher? Somebody who's not looking for a job, but then they see your ad that's been targeted through all the incredible data that LinkedIn has, like your job title, how many years you've been somewhere, your experience, all those skills ranking. Well, when they have all that data and they catch those passive job seekers, they might say, you know what, maybe I'll take a look at this gig. Hey, I can work for Tony over at doing a little crypto work, or work with Mick, doing some startup stuff. Hey, maybe I'll check out that job. Well, here you go. I got $50 for you, 50 beans right now, a 50. Go to linkedin.com/twist and you'll get $50 towards your first job posting. Think about that, $50 right now if you take the time, and I don't know how long they'll keep this up, linkedin.com/twist, linkedin.com/twist. We filled 3 positions in the last 5 months here. Our studio director, Charles, who's been upping the video quality and audio here, he was a real catch. And we're just getting incredibly high quality candidates. We spoke to 17 candidates when we were looking for our studio director. And we had 3 or 4 choices to go with. We picked Charles because he was the best, and he knows it. But here's the punchline. We spent $140 on the ad. Compare that to, and think about that, 17 great candidates for $140, less than $10 per candidate we spent. So go ahead, get the 50, linkedin.com/twist. Okay. So
I love how you went straight to customer acquisition cost right there. You did the math straight away. That's excellent.
Well, that's what I do. I mean, we do this at startups. We want to know our CAC.
Totally done.
So I'm just thinking per lead.
Yep.
And then I'm thinking about the conversion. And let me tell you something, Charles ain't cheap.
Yep.
So when we left our heroes here, we were talking about why hasn't there been a killer use case for crypto after 2,000 crypto dipshit ICOs. Let's get to it, Pomp. Let's mix it up here. So 2,000 dipshit ICOs.
I'm going to do something that the Twitter trolls are going to not like, but I'm going to defend you a little bit in that I agree with you that majority, literally probably 1,800 of the 2,000 are complete garbage.
90% garbage.
I mean, just absolute garbage. And majority of them are going to be effectively at zero at some point. So they're not going to go to the price of zero on an exchange, but they're going to be illiquid. They'll get delisted and people holding it will just have no liquidity and they're just holding an asset that has no value. And it's because a lot of people saw this as a way to raise capital. It's non-dilutive, easy with retail investors, et cetera. And the warning signs were there. Anytime that people are pitching you and they're talking about how many folks they have in their Telegram channel, probably not the people who are really focused on
talking
building
about
a
soft
company.
metric. Here's our soft metric. We have 1,000 people in a chat room, and it grew 10% yesterday.
Yeah, I mean, like that's what was happening, right? And so, thankfully for us, in 2016, when we first started looking at this, we said we just think the ICOs are a bad investment opportunity. So we understood why founders were doing it, but just there's no governance. We don't own anything. It's really hard for recourse if something goes wrong, et cetera.
Right, sound like me. No, actually, we're really in sync on that because that was my first thing. Was like, who are these people? Yeah. Why do they need this much money? Why are these shares not preferred? Why is there no governance? And what's your recourse? What's your recourse if they decide to print 1 million more tokens or 1 billion more tokens and watch you out? There is no recourse. And in the documents, the lawyers putting these documents together were savvy. They're like, your money, your purchase is worth nothing. Yep. We can change the number of shares at any time. Or, I'm sorry, tokens.
Well, I'll take it 2 steps further. So one is not only can they do whatever they want, but 2 is that take something like EOS. They booked all of the capital that came in the door as revenue. So,
what?
So, there's like $4 billion. They sold these tokens over a year on a periodic basis, on a daily basis.
Yeah.
And all of that revenue that came in got booked as revenue.
Wow.
And
did they pay tax on it?
Should have. Yeah.
I'm sure that there's some, they're trying to do everything the right way and all of that. But
because
still,
if you did book it as revenue and you brought in $1 billion, the government
$4 billion.
$4 billion. The government would expect to see 40% or 50% of that.
So the reason why I bring up that example is just that was positioned as a fundraise by the media and coverage, et cetera, but it got booked as revenue. And so,
so they were going for that utility token concept.
Well, the interests are just misaligned, right? When you invest in an early stage company, you want the investors to benefit when the founders benefit and vice versa.
Yeah.
And when you get that, really good alignment, there's a way to build a company. What was going on in those 1800 of the 2000 was not that. And I think, look, the prices drew down 90, 95, sometimes 99%.
Yeah.
And it was pretty obvious to see if you're looking at it from, am I investing in a company?
Right. Mick, when you saw all this going down, you must have had companies come to you and say, hey, we can't raise from angel investors and seed funds and venture capitalists. We're not clearing market there.
Yep.
Should we do an ICO? What was your advice to them at the time? Because I would suspect you don't want to ever have a founder not raise money that they can raise. You want to see them continue the mission, but it did feel fugazi.
Yeah, and you shouldn't continue the mission if you can't actually go and do it properly, and that's okay. You spending 10 years of your life still goes by. There's maybe it's the market telling you should go do something else. I think it's a combination of timing. We had crowdfunding kind of working, so there was this thing of pre-ordering a product, and
then
there
Kickstarter
was
crowd,
and then
Indiegogo.
That's right, and then there was crowdfunding for equity. So there was this notion
Seed
of
Invest Republic.
That's right. So there was a notion of buying things in advance, and then there was a notion of maybe I can own some of the company, and then you have there's this thing come along called ICOs, and people making money off Bitcoin. They don't quite understand it, and people are just saying, "I'll just take some money." And I'd like to know how much money went into those 1,800 which were terrible, versus how much money was invested by uncles and aunts who put 250 grand into their niece's startup, which was also misguided. And so I'm not saying that they're the same thing, other than the fact that people aren't putting much forethought into it. For specific companies, my ask is, what is your big goal? What are you trying to do? And if your company has a baseline of a currency, so we have a company in our portfolio which is a online wagering, peer-to-peer wagering.
You can feel free to say the name of it.
For esports. So they just changed their name. I can't remember their name. But they had an underlying currency for their product.
But that one makes total sense to me.
That's right.
As a poker player, I would love to settle in Bitcoin or whatever imaginary currency, digital currency, in the cloud and just have it all wash out. Yeah, perfect for me.
So if there's an underlying currency where there is an exchange of value which is variables between multiple countries, and there's things like that, you could see the possibility of that. But it's the same thing that people read TechCrunch every day and they're like, I should go and raise money for my company. Like, no, you should run a good company, build products people want to buy. And raising money is a way to grow your business. Right. And there's actually lots of ways to raise money.
It's not the end game.
It's not the end game.
Got it. Now, Pomp, we're faced with 70 or 80 legal actions by attorney generals, SEC against these ICOs.
Look, Kraken, which is a crypto exchange based in the U.S., they do this transparency report every year, and they just released it for 2018. They had inquiries, so this could be subpoenas or just kind of email type requests.
Sure.
475 of them last year.
Wow.
That's one crypto exchange. And they show you the thing. It's DOJ, SEC. I mean, it's everybody. And it's not them saying you're doing something wrong. It's somebody who trades on your platform, right? We want all their transactions.
Yeah. This is like Verizon having, the FBI coming and say, "Can we get Michael Cohen's?"
Well, the reason why they presented it was because they were saying, look, it's becoming more difficult for startups to operate in this environment because that takes a lot of manpower, a lot of resources to respond to 475. That's one every 18 hours.
Yeah, you get 2 a day. If you do it by business day, you're talking about 2 a day on a business day.
Yeah.
And if you have one attorney, that sounds like a little bit more than even one attorney could handle.
The other thing I'll say that I'm guessing you two will both agree with because of the comments you just made, there's very few companies in the history of entrepreneurship and startups that have come out of the gate in the first round, they've raised a ton of money. And then they've been successful. Right. Well, like
it means
Jet.com maybe, right? There's like one or two outliers where they kind of
Color ran 40. But we have to realize in both of those situations, you had serial entrepreneurs coming off of massive sales of previous companies. In the case of Color, that was a Sequoia founder who had multiple offers, and Sequoia is just like, we'll just give you 2 rounds at once. Why not? They trusted him. He had sold his last company to Apple.
Yeah. It hasn't worked out that much. And so when you see,
and it didn't work out, even for somebody who's well-heeled like that.
And when you see the ICOs going out and raising $50, $100, $250 million out of the gate, you're sitting there and you're saying, you're actually going to suffocate the company just as bad as if you starved it with not enough capital.
All right, when we get back from this break, we're going to answer the question that I teased at the first one, which is the use case. Where are the use cases for crypto when we get back? Let me take a moment to tell you about Kruze Consulting. Startups could easily save thousands of dollars, perhaps hundreds of thousands of dollars in payroll taxes next year by taking advantage of R&D tax credits. They're very complicated, as you know. Some people just get a little bit flustered by them and they don't even bother. Well, you have a startup tax expert in Kruze Consulting that a lot of my startups use, including Superhuman and Calm.com. These are two of my biggest, most promising investments. A lot of you use it. Well, here's what Vivek at Superhuman said. We're huge fans of Vanessa and the folks at Kruze Consulting. They set up our books, our finances, and other operations, and are constantly organized and on top of things. And that's what you want in your accountants, let me tell you. And as a startup, you have to focus on your product and customers, and Kruze takes care of everything else, which is a massive sigh of relief. I highly, highly, highly recommend working with Vanessa and her team. And Casey over at Calm, the VP of Operations, says, as a startup, moving quickly is a top priority for us, and we just needed to get our tax returns done, period. After we uploaded our docs, we got our tax returns in 3 days. E-filing was confirmed by day 4, super responsive and helpful. So if you are a seed or a venture-funded Delaware C Corp, seed or venture, go to cruzeconsulting.com/twist, cruzeconsulting.com/twist, KRUZE, and get a free tax consultation and R&D tax credit white paper. That's cruzeconsulting.com/twist. They do a great job. Kruze's clients are going to save $3 million this year in payroll taxes. Wow. And most CPAs don't know anything about this R&D stuff. So go ahead, Kruze Consulting, KRUZE, consulting.com/TBRIST. Okay, use cases. Mick.
First of all, crazy backstory.
Yeah.
I think Bitcoin and cryptocurrencies came from Napster. So Napster got shut down by having a centralized server. So what Kazaa did after that, which I was head of marketing for Kazaa.
Oh, you were?
Yeah.
That's crazy.
I used to love Kazaa, but I mean, I had a friend who loved Kazaa.
You can say it. You can say it now. It's okay. I was actually deposed under Californian law in Sydney out of our jurisdiction. That's how crazy it was. But
yeah, Kazaa was amazing. Oh.
Yeah. But it was a distributed index system.
Sure.
So you couldn't use Napster. Didn't work because you had a server
single platform. So distributed computing.
Distributed computing, and then after that came BitTorrent.
Yeah.
And
Nutella. And
Mega everything.
Well, Mega was cloud. The Mega was the cloud part.
That's right.
And it's a subtle difference, but a real one. The cloud stuff, what they would do is, let's say you had a file like a stolen file or whatever, copyrighted, a public domain one. You have file The Last Action Hero, worst movie ever made. I go to download it off BitTorrent, or wherever. If it's already in your storage, it just points me to your file. So we don't have it in two different Dropboxes. So Mega's idea was, and then instead of downloading a torrent over 2 days, it would just show up. You're like, wait, how did that happen? It's like, well, somebody, when you see that 18 million people downloaded The Last Action Hero, that means you don't need to have 18 million copies. You just have one, which is also called Netflix. So they basically clouded it. But back in the day, it was all distributed. And that's what the, Bitcoin obviously has a distributed component, serverless piece to it. Yeah.
But I think that's, utility drives it. And I think what we often see with platforms like this is it takes the platform to exist for a while and people to experiment with it over and over and over again to try different types of utility. So this peer-to-peer gaming company, they're trying one kind of utility. And I've seen energy currency exchanges. I've seen lots of utilities tried, but I still think they're on the dream of the utility being valuable because of network effects required sometimes. It's like, this is the really hard thing to do. You have to have a certain critical mass before they actually have full utility.
But distributed doesn't mean crypto.
No,
it's a component of some crypto executions.
I think the combination is when it gets magical.
Yeah. So tell me, what is the number one use case that you think will arrive?
Well, I think if I knew that, I'd be out there building it right now.
Okay, give me your top 3, and then we'll play the game that way.
I think this company, they convinced me.
Gambling?
The gambling because...
Wagering, I should say.
Wagering, yeah, because you... it's
more gentlemanly.
Multiple people, you can have an escrow component. So, if it's distributed as well, then that makes a lot of sense.
You'd also have a smart contract. Go to ESPN.
Yep.
If we're betting on how many rebounds Draymond's going to have,
True.
They just pull that data from the NBA.com and it settles without us having to go to a
validated.
human.
Yeah.
It's
How many bookies didn't pay somebody out, right?
Yeah.
Over the years.
Listen, that guy didn't need the money.
Yeah. But so for purely...
So wagering is yours.
Yeah,
That seems to be
wagering-
the best one you can think of.
I think at
Pomp,
the
what's yours?
You're going to give me my 1 minute to go off about
Well,
it.
you can go, you can riff and give me 2 or 3 and then we'll work
just
our
one.
way in.
There's just one that matters.
Okay, here we go.
Just Bitcoin. And people talk
That's not a
about
utility.
what is the people talk all the time
The
about
use
what
case.
is the killer app? What is the use case,
please.
right? 40 million people own Bitcoin. It has more volume than Apple Pay, Venmo, or PayPal.
If that's legit.
Well, no,
We don't know.
on chain. We know it's legit. Why is the volume being done?
Yes.
Right. So that's the big question. Is it speculation? Whatever. But just it has more volume being done on transactions. And it's actually available in exponentially more places than those 3 services. It's like Apple Pay, it doesn't work in a lot of countries, right? Venmo doesn't work in a lot of countries.
Yeah, no.
PayPal doesn't work in a lot of countries, right?
Are you counting countries that have banned cryptocurrency usage
So yeah, so
in that?
they can't ban Bitcoin in the sense of they can legally tell you you're not allowed to do this,
Right.
but they can't shut it down,
Right.
right? So they can't stop you.
Which is a
Now,
subtle point.
subtle, but it's important depending on where it is. If it's in the United States and they ban it, right? Look, the U.S. financial system works pretty well for us, right? And you can go buy coffee with all kinds of different, mechanisms. If you're in a country where you're actually worried about censorship or seizure, et cetera, it's a little bit different. The other thing is, if you look in countries, I use this visual where start with a list of currencies. You put the strongest currencies in from the strongest economies at the top, and all the way down, stack rank them, and the weakest are at the bottom.
Yeah.
Bitcoin started out not even on the list, right? It
Right.
didn't exist, got created, no one knew about it, nobody cared. A couple cypherpunks were kind of playing around with it on this email list. It's now surpassed, let's say, 5 currencies. So there's, I don't know, 140 currencies in the world.
It surpassed it how?
In the sense that citizens are opting out of their local currency and going into Bitcoin. So if you look in Venezuela, Argentina, et cetera, the charts look just like you would want a startup's growth chart to look in terms
Exponential
of
growth, yeah, I gotcha.
the adoption. Now, there's a long, long way on a list of 140 plus currencies to go from 5th from the bottom to anywhere that actually, quote unquote, matters in the developed
of
world.
course.
But over time, the hope or the promise of the technology is that it will continue to move up that rank. And look, where does it top out? Does it stop at 100, at 50? Could it reach number 1? There's a non-zero chance it could, but probability is, we're talking, very, very low.
Well, let's talk about China, because China did ban it.
China's banned ICOs, then they unbanned it. They've banned literally events talking about blockchain, then they unbanned it in certain cities. So they've been back and forth and banned a whole bunch of stuff. They're just not happy about this stuff.
And South Korea was going to ban, and then too many people bought it, and they felt like they couldn't ban it. So they kind of couldn't get the genie back in the bottle there.
Mm-hmm.
So that's a sort of interesting test case.
Yeah.
But a lot of people lost money. I think it was 3 million people in South Korea was the number I heard of.
It makes a lot of sense, and this goes a little bit towards the wagering or gambling stuff, in that digital assets have been around a long time in Asia. Like they understand gaming, they understand kind of mobile experiences, digital assets. And so this is just another digital asset. And if you look at a lot of the early people in crypto, whether it was the Tim Drapers, the Brock Pierces, et cetera.
Yeah, those guys are the World of Warcraft guys.
They were in this thing and they realized, there's another digital asset that people are going to use, and they all went into it.
They were selling like plus 30 swords and maces and helmets of invisibility and all kinds of other nonsense.
Huge business, right? And now there's like one on a global scale that doesn't need a video game.
Yeah.
It's pretty interesting.
So your use case is Bitcoin.
It's specifically around money, and it's interesting to hear you say currency within a specific system versus mine is probably currency with no specific system. It's just around the world. The one thing that's
which people would define as money store, but can you
money
after money store and speculation, money transfer? Let's just take that little piece that I think nobody argues over, because that's the only thing that's occurred over the last 10 years of this.
For sure.
So what's the one after that? And why hasn't it shown up?
It goes to this thesis of every stock, bond, currency, and commodity will be digitized, right? And the way that I usually talk to like institutional investors about this is the 3 of us already have digital currencies, not based on the blockchain, not cryptographically secure. US dollar is digital, right? More than 90% of it is not in physical paper coins. But also when you make an investment on a platform, right, and you sign documents digitally, et cetera, you very rarely, if ever, now get a physical stock certificate back.
Yeah.
You usually get it somewhere, whether you hold it in Carta, Seed Invest, et cetera, right? And you hold the digital share there. Now, it's not blockchain based, it's not cryptographically secure, but you have a digital share, digital certificate. Over time, the belief is that every single stock, bond, currency, commodity will be digitized, some on blockchain and cryptographically secure, some not. And so debt is really interesting to me right now because last year there was 3 milestones. MTS, which is a Russian telecom, issued a $13 million corporate bond on a blockchain. World Bank did $81 million over the summer. And then the Abu Dhabi government did a $500 million bond late last year. All they're doing, that's not a revolutionary thing. Retail investors aren't going to go buy this thing and like, oh my God, I'm going to make 5 times my money in a week, right? They're going to make 25 to maybe 100 basis points difference as somebody who invests in a corporate bond or into one of these bonds, but it becomes cheaper for the issuance and the governance. It becomes a little bit more efficient.
Got it.
And so you're talking about incremental improvements. The difference is the bond market, the real estate market, these
trillions.
Are massive. Yeah, 215 trillion, I think, is global real estate. So I think from a size perspective, that's the biggest
and
opportunity.
The fact that it's on the blockchain, the fact that it's digitized means that I can trade with the two of you, our bond holdings easily.
It's frankly dumb stuff, right?
Yeah.
Like the U.S. stock market is closed more hours a week than it's open.
Yeah.
Does that affect your and my life? No, right? But it does affect some people's life, right?
Yeah.
It's hard for somebody in China to buy a U.S. equity. Well, if it's a little bit easier, right? That technology slowly evolves. And talking about the Kazaa thing, I think is really interesting because like we have these services today because a lot of the work that was done then. There's a lot of people who are going to build companies today that are interesting. We're all going to get excited about. They're not going to work. 5-10 years from now, somebody's going to build the thing that ends up, surviving.
Yep.
What do you think the outcome is in the United States for Bitcoin and Ethereum? Do you think these are going to ever become commonplace other than speculation? Because we have such a robust financial system?
Well, I think we're getting to an increasingly globalized world, and even America, which has been very strong, insular with. I won't say the Walls word, although I did. But I think increasingly everyone's going to be participating internationally, whether it's actually doing gig economy work around the whole world. We see a lot of this. Middle America is actually one of the largest gig economy areas in the world. So if they're going to have to trade around the world and the US currency is not the base point, then maybe we need another currency to be the base point. It's not going to be the euro. It's not going to be Chinese currency, so maybe it is maybe it is Bitcoin or Ethereum. So,
how come Ethereum hasn't been investigated by the SEC? Because they just they did a pre-sale. It's not a utility.
The only guidance that's come from regulators on Ethereum specifically is today it is not a security. So what they did not give guidance on is when they distributed it, when they fundraised, was it a security and somehow evolved into a not security? That's one of the big debates in crypto.
How is it not a security? If people were buying it for its appreciation.
Well, so imagine if when they did
and they were selling it to
fundraise,
investors.
So let's say during the fundraise, it was a security. The argument is today you're using it like a utility. So AWS is actually super interesting to me because an AWS credit is basically a utility token. It gives you access to use the computing power, et cetera. They give it away to try to incentivize you to come onto AWS, and they say, hey, it's $15,000. You can use it for 3 months for free, right? And then eventually you get stuck and you keep using it. That looks awfully familiar, like a lot of these crypto companies. It's just not based on a blockchain. They didn't fundraise, right? So
they didn't issue them. There's no mining infrastructure.
It's that initial fundraise. That's the big problem, I think, with the security, not a security. Yeah. So these people could fundraise in traditional sense and then just use it the same way AWS credit is.
What happens if they go back and say Ethereum was a security? Because we're talking about whether hundreds of millions of dollars that transacted or just tens of millions?
Since Ethereum got created, there's been definitely hundreds of millions, definitely billions.
Definitely billions since then. But I'm saying in that early period when they were raising money, it's got to be in the hundreds of millions, I would think.
I forget the amount.
Pre-sale.
I think it just becomes hard. But here's one thing to.
So it's hard, and the SEC just throws their hands up. Like, what's the point? They don't have enough agents to investigate everything.
They today have been, I actually give them a lot of credit for not being overly heavy-handed. They're trying to encourage innovation while protecting the market and do their job. they've gone after the obvious scammers, right? So if you said to me, Mick, hey, give me $10 and I'm gonna, go do something, and we gave you $10 and you ran away, you're easy to go get.
So
right?
they're not enforcing the laws perfectly. They're going after the worst offenders and working backwards, which
and then I
guess
think that
makes
they can
sense.
slowly start to get to the really complex cases like an Ethereum, XRP, right? These ones that everyone's debating.
Okay, this is a big question that you have to educate all of us on. When we get back from this thing, why does everybody in crypto I talk to say XRP is a scam? Because I hear this currently, and you don't yourself hold Ripple in your fund. Yes or no?
XRP is not in the index fund.
Okay, so you don't hold it. Everybody tells me it's a scam. I tried to have Brad, the CEO, on the podcast. They kept trying to horse trade with us, and they were just jerks about. Their PR people were complete utter jerks. Honestly, I've so disrespectful. They were the PR people at Ripple were like, "We'll give you Brad if you accept this person," and I was like, "Are you crazy? We're not horse trading guests with you." It was the stupidest, most I just told them this is too insulting. You're disinvited from the event.
Yeah.
I'm not going to sit here and have you tell me in order for me to interview Brad, I have to take somebody else.
Sure. How about I just not interview him? Yeah.
It was just ridiculous. Yeah. And and I told Brad, because we know each other, I was like, Brad, your story's being told by all the people who hate you. Mm-hmm. We're friends, or friendly, I should say. We're not friends. We go out to dinner, but we know each other for a long time. Mm-hmm. I said, come on the podcast. Let's talk about it. Why don't you tell your story instead of having all the haters tell your story all day long? But literally, if you go to any crypto conference and you say the word Ripple or XRP, everybody goes scam. And I'm like, I want to understand why that is. And you're going to tell me when we get back, Pom. All right, let me tell you about something that is the opposite of a scam, something that has saved us tons of money, and that's Capterra. Oh, yes, Capterra. Are you doing things the old way at work, trying to replace software that's causing you angst and agony every day, but you don't know what to do, what to replace it with? Well, Capterra is a leading free online resource for the best software out there. Think of it like Yelp. 700,000 reviews of real products by real users who have bought that software. They have 700 specific categories, and we did this recently. We used Capterra because we were, and I don't want to say getting ripped off, but we were getting ripped off because we were using some sales software. I don't want to say which one, but they were charging us too much. This stuff gets pretty expensive, and I'm talking thousands of dollars a year. We went on to Capterra and we found the competitor set. We picked which ones we wanted to compare, and then we trialed them, and we got a free trial for those pieces of software through Capterra. Almost like getting a reservation or looking at the menu or the reviews on Yelp. We found a better solution that was 80 or 90% less per year. That's thousands of dollars back in my pocket. Thank you, Capterra. So I want you to visit Capterra, CAPTERRA.com/twist to figure out how you can save money or find better products that do more for you. There's a massive competition going on right now. Every single category, CRM, sales automation, whatever it is that you're looking to do inside your company, HR, just figure out which one you're trying to optimize. You go on Capterra, and they'll tell you which are the best ones. You read the reviews, you save money. Oh, and by the way, it's free. Absolutely free. So go there and get the right tool to make 2019 the best year ever for your business. That's what I'm trying to do. I'm trying to make it my best year ever. CAPTERRA.com. Capterra with 2 R's /twist. Use the /twist, please. I know you don't need any money or anything like that, but go to capterra.com/twist so that we get credit for the visit. You're going to love it. All right. Pomp, you refuse to hold Ripple.
All right, caveat. I defended you.
Hold on.
No, so the index has...
I'm not saying you said to me it was a scam during the break.
No.
Or before the show started.
So the index is top 10 tokens, market weight average, rebalance monthly, and then just like the S&P 500 has float requirements, so Tesla's not an S&P 500 because it's too closely held. We have an index committee that created a rule that said any token that has 30% or more of the token supply held by the issuer or a related entity was no longer eligible until they got underneath that.
How much do the Ripple founders, insiders own? Nobody seems to know that either.
So there's a bunch of questions, right? And let me talk you through what the questions are or the issues that many people have with it. I'm not even saying that I initially have issues with all these things.
We'll give you the cover. But permission granted.
I think there's a couple things. So one, it's heavily centralized. Two is a lot of people question for Ripple, the company and the technology to work, is XRP necessary to be used, right? 3, there's a bunch of questions around how it was marketed, right? The confusion between XRP and Ripple. And
so Ripple's a company that sells blockchain software, from what I understand, to
financial
banks.
institutions, banks, yeah.
So when you see a press release, oh, this huge bank is using Ripple, that has nothing to do with XRP, a token that they happen to have released that was sitting there when Bitcoin started to spike, and everybody just thought, well, I might as well get some of this Ethereum and Ripple.
Yeah,
they benefited from being there.
The company
is what I heard.
Well, the company is, the way I think about it is they're trying to replace Swift. And if you could do that, that'd be pretty valuable.
Define what that is and why that's important.
Swift is basically the infrastructure in which people send money between banks. You know, there's trillions of dollars a year that go through the system. And there's long settlement times. So if I send you a wire, for example, or a Swift transaction, it could take 24, 48 hours to settle. It might not settle on the weekends, etc. So if you can fix that, disrupt a lot of commerce and have better solutions, it's going to be worth the money. The thing I think with XRP is the thing about crypto is it's very religious in a sense, or tribal. And so there's ethos that everyone buys into. And this happens to be an application of the technology that does not fit within the majority's ethos, if you will, of decentralization, et cetera.
Because there's a central company controlling it.
Exactly. And so there's not a lot of transparency in the early days. They've gotten better about that. They've actually, I believe they've taken the tokens and they've put it in like an escrow, so they don't hold it themselves, but there's questions about that. And so the way I come out on this is I actually think that we should have as much experimentation as possible.
Sure.
Right? So we got a new piece of technology. I've got my own personal opinion about what I think is going to work. I'm wrong probably more than I'm right. And so I would like as many smart people as possible to take this
as an investor,
apply it as many ways as they can, and let's see who wins, right? And let the technologies compete on merit. I think the thing with XRPs has almost become cool to not like them.
Yeah.
Right? It's like a badge of honor.
Got it.
Which just isn't healthy for anybody. And so you see it spill out on Twitter.
But how much of this was based on them trying to, the leaked story? I've heard because I get a lot of the back channel from the venture capital community, because I have venture capital is kind of like the next stage after what I do, syndicates and angel. And they were like, yeah, they're trying to buy off Coinbase to list them by giving them $100 million in XRP or something crazy like that. And then that they were giving all these XRP donations to schools and this and that. Did you hear all that? That people were like splashing XRP around?
Yeah. I mean, look,
so is that uncommon or is that weird?
I think the facts, look, Ashton Kutcher went on Ellen DeGeneres' show and gave XRP to her for like a charity. I actually, again, that's fine, right?
Yeah.
I don't have a problem with people doing charitable things. Now, where the question comes into, are they doing a bunch of this stuff to try to change the narrative? Are they trying to buy access, right? I have no clue.
We're trying to get people at home to buy XRP in a giant pyramid scheme where they own 70% of the tokens.
Yeah, I mean,
because think about this. If I own 70%, what do you think they own? The insiders. Non-float. Is it above 50%?
I don't know, but here's what I'll tell you is what probably did not help them, right? And so in their defense, look, they got splashed around on all these press articles, people saying they're the richest people in the world during the big bull market.
Yeah.
Right?
That puts a target on your back.
I mean, I don't care who you are.
I'm the richest person on the planet. You don't know who I am. I've never built anything. You don't use my product, but I'm the richest person.
Yeah, that just doesn't help anybody, right? And so I think that, look, there will be other people who fall down this trap through the experimentation because they're going to do things people don't agree with. The press is going to run with it. And so it just comes back to, if they build something that the banks want to use, the banks will become customers and the technology will win. If not, it'll all go away.
But that has still nothing to do with XRP. See, that's the disjoint, is all of this behavior over here screams of pumping. This is what I heard from people. Mm-hmm. They're pumping a currency over here, XRP, with the performance of an enterprise software platform. So it'd be like Slack saying oh yeah, we're crushing it, and we have SRP tokens over here, Slack tokens. And then people are like, well, I can't buy Slack equity, so I'm going to just go start trading these things. But they're totally separate, disjointed entities. Then you start having celebrities giving other celebrities XRP. That feels like you're paying them off, and you own 70% of the currency. So if you sell any of it, you're just trying to move your position out. Well, and so that's what I heard is the founders are moving their positions out, and that whoever's buying it's the sucker. That was the negative. That's not me.
Yeah.
That's the negative back channels, that they're trying to use these donations as a way to get people to buy it, increase the profile, use the corporate enterprise software to get the XRP to sell so that those founders and insiders can sell their meaningless tokens.
Yeah.
What do you think of that criticism?
I think it's really hard for us to know exactly what's going on. What I would say is that
it goes back to your problem about transparency.
The mechanism you just described is probably applicable to like 40 to 50% of the entire market of all 2,000 tokens, right? So it's
like a pump and dump.
I mean, look, it's
pump and dump.
Ripple or XRP went up 30,000% in 2017. Right?
Bonkers.
So and now again, let's say that they did nothing to aid that, right? So we'll give them benefit of the doubt. So they did absolutely nothing to do that. That's unsustainable, right? And then it was at like $5 and it crashed below $1. Look at all the other tokens. They've all done the same thing, right? They all look like this thing. And so I think what happens is you have to go back to the fundamentals of when you're talking to a startup, you tell them, you got to build technology people want, you got to convince them to use it, you got to retain those users, and you got to be profitable at some point in the future. So that's what we're going to see in crypto as well.
Have you tracked any of this with the XRP and the Ripple controversy?
No, not a lot, just because it became an avalanche of just the same, really. And everyone was trying to do too many complicated things at once. I think they were trying to do crypto with a blockchain, with a new technology and a new market, with a new platform. And customers move a lot slower than that. And enterprise customers move even slower. So it was worse in the first .com boom when you're basically got 50 companies trying to hope that there's a lot of customers out there when the customers are going to take 10 years to come.
Yeah.
So we don't have the underlying infrastructure. We don't have the next level of services. We don't have the customers being ready. I think a lot of this, so the opposite of your index of the top 10 is there an index of the other 1,800, because some of them are going to win. Like if you take the Moneyball approach to angel investing, you invest in 50 companies and you back the winners. But across 1,800, everyone's just waiting for scorched earth.
See, because I was an early proponent of this. Where we were talking about Bitcoin on this podcast 6 years ago, when it was under $1, and then I saw.
Did you buy any?
I bought I think 10 tokens, and they were hacked, and I lost all of them.
Okay.
My wife bought some, didn't tell me. I
Shouldn't have
found out, and I was like, when it was at 15 or 20,000, I told her to sell. She said, "No, I'm holding these for life."
Okay.
So she's a hodler, and so we've made. At the peak, it was valued at 7 figures, so it's over $1 million.
Yeah,
which is not a lot of money for me, to be candid. Like it's not like some large percentage of my net worth now, but I think it probably went down 80%.
And a bonus in your pocket, like it's
But anyway, it's going to come back. I mean, I don't mean to be obnoxious about it, but it's just sort of like it's a flyer.
Sure.
It's like okay, we'll see what happens with it. That's fine. I have some exposure to it, but what I really want to do is one of two things. Either I want to figure out what comes out of the ashes and buy 10% of that company, and then just shove it in the crypto community's face that I found the Amazon. That's
the same guy who owns cryptodipshit.com.
Well, no, I'm going to take Crypto Dipshit and redirect it to that company at some point. Be like, I figured it out. And the only reason I say that Crypto Dipshit stuff is because so many of the people who were attracted to this were the grifters and the con artists. I mean, it was unbelievable. Like Jabarish, whatever that kid named from Radian One. Remember the guy who beat up 2 different girls?
Oh.
Here, Jabarish something. I forgot his name.
Yeah.
Jabarish Chahal.
Yeah.
G-Man. He calls himself G-Man. Anyway, that guy started his own Lydian coin or something, and now there's no reference to it on the internet. It's like, oh, okay, so that's gone. And I knew it was a scam when I went into the rooms and I found these pump rooms in. You know about those
and stuff. Yeah.
Explain what those are.
I mean, look, this is common across all assets, right? FX, stocks, etc. Yeah. Basically, people go into a chat room on some platform, whether it's literally Bloomberg terminals or Telegram, and they start saying, all right, I'm going to buy, right? And everyone starts to manipulate the price up or down as a group in a concentrated effort.
Yeah, so they were like, come back at 7 p.m. and we're going to pick the company to pump.
Yeah.
But remember, don't sell. Just pump it up. And we're going to sell next week or whatever. And obviously the person who's running it has already bought their shares and they're selling it to these schmucks who think they're part of the, pyramid scheme.
Yeah. Very similar.
I mean, look, crypto is the perfect example of these new technologies or markets just reveal humanity,
Yeah.
right? Bad people are going to do bad things in any industry. Like, talk about like Goldman with like the 1MDB stuff, right?
What is that?
I don't know if you've read $1 Billion Whale. So this guy, Joe Low, is a Malaysian citizen. He basically starts a fund working with the government or with the president, and he raised a bunch of money. Goldman helped them raise about $600 million. And all of a sudden, the money's nowhere to be found.
Oops.
And it goes into his pocket. It goes into, a bunch of people around the world's pockets. But the best thing is, he does all the normal stuff you would think. He's out partying, spending millions a night. He's buying mansions. He's doing all this stuff. The one interesting fact is that money actually was used to finance the Wolf of Wall Street movie.
Oh, I did read about that. And he gave Leo some gift that was a ridiculous gift.
Stupid stuff.
But he gave him some $1 million gift or something, and Leo gave it back.
Yeah,
Leo
yeah.
was like, listen, I don't want to be dragged into this nonsense.
Of course.
Like, the movies.
So, but again, right, I'm not saying that Goldman's bad in that situation,
Yeah.
but there's, a rogue person who does this stuff, et cetera. And so I think what happens in crypto is there's less rules. There's no examples of like, Mick's a bad guy. Mick did something bad. Mick got punished for it. So I shouldn't do that. Right.
Yeah.
Like that doesn't exist in crypto. So people think like, oh, I can get away with this. I think now it's all calmed down. People are really scared in the U.S. specifically of doing some of that stuff, and hopefully what happens is we won't see that craziness of 2017 again. Now we can actually get to work and start building some of these companies.
I thought what did Mick?
See, I was thinking one of the things I heard a lot of discussion around was VCs were sort of bad-mouthing crypto a lot because it was a possible alternative to raising venture capital. And venture capital, there's a lot of companies up on Sand Hill Road which have held their mantle for a long period of time, and a lot of people, I think you've talked about a little bit about disrupting that and challenging that, and how some of that's got to change, even though some of your companies are backed by that. And I think a lot of it works.
Hopefully all my companies are backed by them venture industrial complex, yes.
Yeah. But
For the love of God, yes.
competition for funding. Like I think if you look at Kickstarter, wonderful alternative. Don't go and build a product and make 1 million copies and hope that people are going to buy it. Go see if people want to buy it first. But there have been bad stories on Kickstarter where people are like, hey, no one made their products, no one got their products. People lost hundreds of thousands of dollars. And I think that's smaller in scale, but I think you just got a combination of hype cycles that really hit with
This is where the
crypto.
platforms have a lot of responsibility. You would agree?
Yeah.
I think that was the interesting thing, because I had Yancey on the podcast twice, the Kickstarter founder, and they kept upping in very subtle ways the requirements.
Sure.
So I remember for hardware companies, they were like, yeah, you have to have this stage. You have to be in this
Working
stage.
prototype.
Working
Yeah.
prototype. Because people were like submitting
Sure.
things that broke the rules of physics.
Yeah, like you and I are going to go build a rocket. So give us
Yeah,
$20
we're
million.
like, yeah, no, we've built a rocket that can land itself and take off again. Like Elon
with you
took
in
it
it.
off and landed it.
Yeah.
Pomp and I have one that goes up twice and lands twice. So
Yeah.
it's twice as good as Elon's. Like, well, okay, where's the fuel? You're
Sure.
putting double the fuel in? Like, it makes no sense.
I'm going to buy some, so everyone should buy some. We just,
What
we just
happened,
pumped
but
them up
and they were like, okay, so no more of the like 3D
Imaginary,
model.
yeah.
And they
Vaporwave.
actually so they started curating it. And then Indiegogo was like, oh, well, we'll be the stage before.
Sure.
And so it was like, oh, okay, well, if you're on Indiegogo, they don't have to hit the number. They can collect under it.
Yeah.
Kickstarter is going to be above it. Okay, so Kickstarter is going to be the more refined. So if you go to Indiegogo, you know that.
Yeah.
If you go to AngelList, you're going to have some variability. If you go to Jason's Syndicate, you're not going to have variability. I endorse every company. I write every deal memo. You might have different levels of syndicates on AngelList, some better than me. Well, that's not actually the case, but I'm just talking about returns. Pomp. But amongst themselves, there might be difference. And then you have, after that, Seed, Invest, and Republic, which might take more chances and take earlier companies. Because at one point, AngelList was like, we're not going to take anything that doesn't have these characteristics, right? Like launch product. I thought the one thing that I loved about the ICO movement, there was just one silver lining for me, which was the appetite to take risk on a global basis with large number of people investing small amounts of money was truly spectacular. If that could be harnessed in a legal way to back startups, it would be magical.
I mean, look, I say it all the time. The accreditation laws in the United States are violating the American dream, right? And the reason why I say that is the promise of the United States is you can come here, it doesn't matter where you're from, what language you speak, what you do for a living, you can make it, right? And whatever your threshold for quote unquote making it is, you can do that here. But what we don't allow people to do is, if you're not already wealthy, we box them out from investing in the best performing assets or the best performing investment opportunities. Yeah. And so there should be rules, right? That's an important piece, because I think we just saw what happens when there are no rules.
Yeah.
But wealth might not be the best metric to use to figure out who can participate, who can't.
And fair enough. In the United States, the SEC has been told by Congress, and this has passed, Trump signed it, that they have to come up with another definition of accredited, which I refer to as sophisticated. Mm-hmm. And so you'll have accredited, then you'll have sophisticated. That's not their term. That's one I came up with. Yep. And you'll be able to be accredited if you have a degree or life experience or pass a test. So like a driver's license test.
Love that. Yep.
Or you're a professor of finance, at Boise, Idaho University, and you make $150,000 a year, and you're $50,000 shy of the $200,000 a year regulation. Or you've worked at a venture capital firm for 3 years. Or a fund,
whatever it is,
and it's good enough, or a wealth manager, or whatever it is. It makes
Mick,
total sense.
What are the rules in Australia?
Brutal.
It's there are some bad rules I used to have, which was a 2012 2 rule, which is you can only raise $2 million from 20 investors over a 12-month period. That was for without having a full information memorandum.
Oh, got it. Okay.
But they are looking at changing some of the things. You can basically just get if a registered CPA signs a form and says that they say that you're okay to invest, then you don't need the asset base or the income base, because the asset income base is really high and it has the same income.
What's so silly about that rule is that saying you can raise $2 million without any regulation, that makes sense to me, because it's now you've capped the size of the creator. But you've increased the personal size by saying it's 20 investors is capped at, because that's a $100,000 creator per person.
Totally.
You would be better off saying you could have 2,000 people. Now you've spread it to an average of $1,000 creator, which somebody who loses $1,000 creator in a country where the minimum wage is 15 or 20 bucks an hour. It's pretty easy to say that's 2 weeks or 3 weeks of salary. Nobody's going to be destitute because of it, whereas 100,000 could actually be somebody's entire savings.
Sure.
Yeah, the thing with the accreditation laws in the U.S. is everyone says, oh, we have these because it prevents somebody from losing everything.
Yeah.
But we don't cap the amount of investment. So if you just meet the threshold, you could go take all of your wealth and put it in one company, right? So there's no kind of capping.
It makes no logical sense also, because you could just be like, I'm going to give my brother $100,000 to open a pizzeria, my entire life savings, and nobody can stop you.
Yeah.
Mm-hmm. Or you can go to Vegas or your local bookie or buy scratch-off tickets. And by the way, there are guys who are buying $1,000 worth of scratch-off tickets. I mean, this is a real phenomenon that people are doing this.
Of course.
I think Australia has a big horse race called the Melbourne Cup. And
when is it?
It's the first Tuesday in November. So
lock it up. We're doing a special this weekend, startups. I love the ponies, baby.
But I think Australia invests spends 100 times more gambling on that one race than the entire venture capital industry. Like there's some ridiculous number like that.
Well,
but it's because the race is over in 3 minutes. This is the one thing about startups is, as you talked about in your podcast, you hold for 10 years. You got to expect to hold for a long period of time. The race is over in
Who's looking good for the race?
Delayed gratification.
Who's looking good?
I'm the wrong person.
You got any trainers? You know any trainers?
Well, let me ask you guys this, because you guys probably know this data. What are the odds that you invest in a company that returns 10, 20x? Like, what is deemed as a good investment? Do we know what those odds are?
Oh, I could tell you mine.
Okay.
1 every 25 has become a unicorn or so.
Okay, so let's say that you are on the extreme.
I am the extreme.
You're the outlier, right?
Yeah.
But let's just say that even if it's 1 in 10,000, right? If 1 out of every 10,000 just doesn't even become a unicorn, just has a great return for the investors. What are the odds in the lottery? It's like 1 in 265 million.
No, it's crazy.
right? It's just you actually have higher odds.
That's why I wrote the book. In the book, I talk a lot about this stuff where I'm just like, listen, if you invest in 30 companies and you lose it all, and you invested $5,000 per company, just like a feeler bet, or even $2,500, because you can do that with syndicates. Okay, you lost whatever, $75,000 or $150,000. If you're an accredited investor, that should not be a big deal. You'll make it back in the interest on your holdings in some number of months, just the interest, if you're in muni bonds or whatever. Yep. But the potential upside could be phenomenal. So
it's risk reward.
Yeah, and if you lose half of it, I think the likely scenario is lose half or go 2 or 3x over the same period of time that you might have doubled in the stock market or a safer bet. That seems like pretty good odds. The problem is people make the huge mistake of not diversifying and then not doubling down on the winners. And that's like, I just tell people over and over again, go slow.
Yeah.
Oh, you've got 500,000 you want to do an angel investing. Okay, for the first year, 30 investments, 5,000 each. They're like, oh no, I got a feeling about this one. I'm like, the first one you met with, you have a feeling about? By the way,
Surprise. They seemed really confident.
Founders self-select for people who can sell, who can convince people to do
That's very true.
things. So these are charismatic people. Meet with 100, invest in 2 of those. Right? Like literally do 100 meetings, invest in 2. This is when I'm mentoring actual people who are going into angel investing. And then if you get to 30 and one of them comes back and says Sequoia or Benchmark, Bill Gurley's leading our next round, you're like, okay, how much can I have? Forget about my pro rata. Can I go? I put in 5 last time. I want to put in 50 this time.
Sure.
That's the bet shaping that people don't understand. When you have pocket aces,
Yep.
you have 3 callers and the board comes down, in a rainbow and you hit a set. Like you want to get as much money in the pot as possible.
Sure.
You got the nuts.
Yep.
If you get sucked out on, who cares?
Yeah. There was an interesting tweet recently when the lottery in the US was massive. It said, "This is how people think: is 1 in 800 million. I just might win." But 25% of people who text while they drive, that'll never happen to me. It goes to human nature of like, no, 25% of people crash with texting. No, that's not me. But 1 in a billion, yeah, my chance. So human nature goes against you.
Let's talk about venture capital. This is one of your suggestions. 2018 is first year more capital from Silicon Valley was invested outside the Valley. Looks like...
I was trying to find the source of this trend, but it was basically the cost of the valley, and I think we all can recognize this. I think that there's something building up which is actually spreading people. A lot of people moving to Denver, to Austin, LA, Seattle, and even if the US venture capital had grown slightly, a lot of venture capital from the valley actually went into companies not based in the valley.
Yeah.
So
Pull up the chart if you can over there.
Then I think there's also a globalization thing where there is great tech being developed everywhere. China is
it's from The Economist here, but yeah, China is the big reason here because in real dollars we invested more than we ever had, I think, here.
Yep.
But yeah, the pie is getting bigger, and boy, look at that China.
It's growing so fast.
Unbelievable.
So fast. And you've got these other really good markets, and it's...
I'm worried about China right now.
Yeah?
Well, I'm going to Hong Kong next week, and I had mainland China as a possibility, but...
Go to Shenzhen if you're so close to China.
No, I've been to Shenzhen before. I may take a zip up there, but I'm going to be doing an Angel University next week. I'm teaching Angel University. But I was talking to my wife. She's like, you're not going to mainland China. I'm like, well, what's the problem? She's like, oh, the United States made it like level 2 or whatever. And this Huawei fight.
Yep.
And Trump's little back and forth. But there's a Canadian citizen who was tried for drug smuggling, and they just announced he's going to get the death penalty.
Wow.
Just happened to be that they announced that like the week after the CFO of Huawei was arrested in Canada, that this Canadian, so it feels like tit for tat. And they just arrested a Huawei spy, allegedly, in Poland. This seems pretty dicey. If we were thinking about global Black Swan, what's on your Black Swan list? This is a good way to wrap up the show. Black Swan list.
Global Black Swan.
Well, because by definition, a Black Swan is... you can go read the book, but a Black Swan is, before they knew there were Black Swans, they didn't know there were Black Swans. They came over a hill and they found one. Right. By definition, it's something you didn't know existed. So a Black Swan would be like the financial crisis or the dot-com bubble. These were things that just people didn't foresee happening. I mean, some people did. If you had to rank them 1, 2, and 3?
Well, I'll just give you 2 things.
2 things you're worried about.
Not worried about, but just I think would be very interesting because of the repercussions across a whole bunch of different aspects of life. But one is I really do think that there's a massive problem in higher education. And so I think we all are like, oh yeah, look, student debt's really bad, and these universities continue to rise prices. And I always joke, I'm like, if you had a business that every time you rose prices, the line outside the door never went away, you would just keep raising the price.
Yeah,
right?
Sounds good to me.
And so that's what they've been doing. And I think it'd be really interesting. I forget who said it, but somebody was like, look, what if 50% of all higher education institutions were out of business in 10 years? Like there's just this massive bubble and it all went away. So something there feels like it's actually possible and
could be a contagion, maybe. See, crypto was supposed to be the big contagion. I didn't think it was going to be a contagion because I'm like, it's a relatively small number of people on it's a global phenomenon, but the number of people per country is relatively small. If they lost everything, it would sting, but it wouldn't.
Yeah. So here's the second one, and this has nothing to do with business, but I've been thinking more about it. I always joke when I do the podcast, I ask people about aliens, right? It's just kind of a funny thing to hear how they think. Yeah. There's the head of, I think it's astrophysics at Harvard, swears that this thing that came into the solar system is a spaceship.
It's the first asteroid. It's the first object to come into our solar system from outside of it that we've monitored because we have a new satellite. And it's Waymo. Jackie, look it up. It's a Hawaiian name. Just type in Hawaiian spacecraft. But
Waymo has the naming rights. That's early on the branding. That's good money well spent.
Because the part that's crazy here is if it is actually deemed, a spaceship, whatever. Forget are the aliens coming to America, Earth, etc. But just what people will think and do. Right? I mean, look at this thing.
Yeah, so this object is moving, and what happened was there's a professor, and they said this thing is not traveling. They went through like 50 different characteristics of comets, et cetera. It doesn't fit any of the characteristics.
Yep.
Also, the footprint of it is so long and so thin that it doesn't exist in recorded history of something that would be flying around. Also, it came
The trajectory
was kind of like it was doing a flyby of planet Earth. So why is something that is the first thing we've ever recorded to make it from one solar system to ours, and it's the closest, its trajectory is from the closest solar system with the highest probability of life. So now we're like, wait a second. And it's rotating in a way that means it's emitting gases. But it doesn't make sense that it would be rotating like that. It feels like it's actually got the parameters of what they call a solar sail, which is you can put a giant sail out there and shoot photons at it, and it propels it.
It's crazy.
Yeah.
And he's doubling down and tripling down on this now, and nobody in the community has been able to debunk what he's saying.
He pulled a Satoshi. Satoshi's famous for in early emails basically saying something like, look, if you don't understand it, I don't have time to explain it to you.
Sure, yeah.
The Harvard professor literally wrote somewhere, he's like, I don't care if you don't believe me.
Sure. Yeah.
Right? Just like, look, this is what I believe. It's pretty crazy.
The crazy thing about this is what Yuri Milner is spending his Facebook windfall on. He is paying for the satellites that are now giving us the ability to see these things. And there's another satellite going up that will be able to tell conclusively what this is. And we're going to have that satellite in 2 years or a year or two. When that satellite's up, it's going to be, and I've talked to Yuri about this multiple times. I told him, I was like, Yuri, I know a lot of rich people who do very boring things with their money. You are the most interesting spender of money I know. It's not on planes. It's not on buying lanai like Larry Ellison or whatever. He's literally daisy chaining a series of satellites, and he's got 5 of these projects, and they're all 9-figure projects. I mean, we're not talking about $1 million or $10 million. We're talking about hundreds of millions of dollars. He is just spending it. And I said, do you realize if your spending results in the finding of alien life, you will be one of the most important people in the arc of human history. More important than Mark Zuckerberg or any investor ever was.
You said that to me, probably went and doubled down.
Yeah. I said it to him 2 years ago because we had lunch and we were talking about this. And I was like, he's a really interesting cat because most people make their money and they're just like, I need more. And he's just like, I don't need more money. I need to find aliens.
Do stuff. Yeah.
And I had this long conversation with him. There's a whole concept of a Goldilocks planet. Do you guys know what this is?
No.
Okay. Not too hot, not too cold. It turns out if we are too close to the sun, all life burns
Earth,
up.
Basically, yeah.
What's that?
Like another Earth. Earth is a 1 in a billion planet.
It's a 1 in a billion.
You've got to get exactly right.
And so we know, here's the size of the star. Here's what it's going to be radiating in terms of heat. Therefore, this star, if it's the same size of ours, life exists here. But if you go out another whatever number of hundreds of millions or thousands of miles, whatever it is, it's too cold. And if you get closer, it's too hot. It's pretty common sense.
Yep.
So they start identifying those and they're like, oh my God, there's a lot of these stars. And you know how they find them? I was like, how do you find them? Because they're dark. They're not stars. You can find stars. You can't find planets. He's like, this is a very good question. It's my Uri Milner.
Yeah.
What we do is we look at the star, and then we see something blocking the star. This is a planet going around the star.
Wow.
And then we can tell the distance.
Yeah.
They've identified them. And they found a number of them that are giant. So we have this conception of like Earth, like, oh, it's a big place. There's one that's like 400 Earths, and it's in the Goldilocks zone. And we're going to try to find these things. We're not going to find them in our lifetime, but it's also finding the signals. So I agree with you. This could be...
When I was in high school, there was 9 planets. That's all we had.
That's all we had.
There's over 1,000.
Then we lost one.
Yeah, and then we lost one. And
so do you have anything on your
now.
list of things that you worry about existential global crises?
Less worried about, but I think it's an
Or
impact.
monitoring.
So Africa, Nigeria is going to be one of the biggest countries in the world in 10, 15 years. And Africa is going through, if you read books like Abundance, Africa is going to go through a step change where it, like China has done over the last 20 years. So there's going to be 500 million people go from working class to middle class, and that impact's going to happen in Africa. Smaller families, increased wealth, increased international travel, increased commercial, and they are I think especially the women in Africa who hold it together are incredibly entrepreneurial, incredibly strong leaders, and I think we're massively underestimating the global impact of Africa's rise.
Yeah.
So that's going to be really exciting.
This is where our xenophobia is really going to bite us in the ass, in my mind, because China is investing massively in infrastructure in Africa.
Railways, everything.
Bridges. People are, I saw a film about this, like they're sending 500 construction workers to build some bridge in the middle of nowhere in Africa for 3 years. They don't see their families for 3 years. And they're all going to be in debt to China.
Yeah.
If you look at those, like your world in figures, that account, it's like really great. Everything is trending in the right direction.
Totally.
Except for one thing, democracy. It's flat to down. 57% of people used to live in a democracy in the world. That's where it peaked, like in 2014. Now it's like 53%.
Sure, yeah.
So we're kind of flat, trending down.
Yeah.
And Africa's this jump ball. Who are they going to align themselves with? Authoritarian regimes? Who's the Middle East going to align themselves with? These authoritarian regimes? Are they going to lean towards Russia and China, or are they going to lean towards the United States? This is where our spending internationally, it sounds stupid that we're spending money building bridges in different places. China's building bridges in Africa for a reason. And if all those 500 million people live under authoritarian dictatorships, socialism, communism, hybrids, who knows what they are, it's not going to be good for the world. The majority of the power and the revenue in the world is controlled by despots like Putin. Mm-hmm. So that the number one for me is really the Chinese market collapsing, which they have a lot of controls and levers, obviously, but man, I think there could be a civil war over there. And if there's a civil war in China, I mean, what happens? Who's in charge of a country that big with that many provinces? And there's been all these protests going on there, and they really don't make it into the press, but it's pretty gnarly over there. That's totally. Worries me. And obviously Putin. I think the impeachment is going to go well. I think that's going to be a plus for the stock market. What do you think? Impeachment starts in 2019. Stock market doesn't care.
That is one of these flip a coin. Literally,
how do you even
if
handicap
that happened? It could go either way. Honestly,
I think part of it's pre-baked.
Oh, it's happening.
But I moved here 2.5 years ago to the US, and a month in, I said Donald Trump's going to be elected, and I got roasted by everyone here. It's like, no way, no way. And
it was a 15% chance. Trump didn't think he was getting elected.
I was like, do you know the bubble that certainly it's looking like it might be the bubble on bubbles, but it felt a bit different. And if you compare that to Africa, there's an amazing book called Anti-Fragile where they talk about
I read it.
Big systems have to constantly change.
Same as the
Black Swan.
Nassam Taleb.
Right, same guy. Yeah.
Hey, how come we haven't had him on the pod? Let's go, Jackie. Yeah. When I go to New York, I want to see him on this podcast. Let's go. Take a memo.
We're being bumped. That's right. Go to one.
No, I mean, it's a good interview to get.
He's an awesome guy.
But anti-fragile systems that are strong.
Constantly change.
And constantly change.
As about like this, the American system is quite old now and it needs to change. Where African systems you talk about, they change pretty regularly. Not to say they're always.
If you change your workout, you're going to use different muscle groups. That's a good idea.
Yeah.
All right.
Interesting times.
Hey, how does your fund work? I give you a little bit of money. You buy these currencies. Do you take?
So the index fund is just beta exposure. Basically, we partnered with Bitwise, which is a.
How do you make money off that? How do you get paid?
Fees.
20 and 2?
No performance fee.
So you just get a fee for the amount of assets under capital, 1 or 2% of it?
Yep. It's 2%. And the thing in crypto, right? So a beta exposure index in the traditional markets, there's no one walking around with a 2% fee, right? And it's just over time, the custody, going back to kind of how we started the conversation, custody is still such a big issue. And especially for institutions, right? They kind of want all of this deep custody and auditing. It's
expensive to do.
It's just expensive. So our hope is actually over time, this is going to get compressed down. And we just need more people, right? More entrepreneurs.
Is it public how much you have under management in that fund?
No.
Oh, okay. Is it significant? Is it tens of millions, hundreds of millions?
So Morgan Creek's, I think the only number that we've published is like 1.7 billion total assets under management across all businesses. Crypto, we'll announce a venture fund here next 2 weeks with a ton of institutions that are pretty unique. So we'll see.
If you were advising your brother who had money laying around, would you advise him to buy Bitcoin now or dollar cost average into it?
So,
how would you advise your brother? Not a public, like...
I have no financial advice, but here's what I'll tell you.
Okay.
My pitch to a institution, which I think most retail investors wish that they had the discipline to invest like institutions, is Bitcoin specifically has a known downside. Whatever money you put in could go to zero. But the asymmetric return profile of this particular asset, I think, gives it the title of the best late-stage tech investment available. Right? What asset do you know that has $50, $60 billion of market cap that could still 100x?
Uber, Airbnb.
Yeah, there's a couple, right? But there's just not that many. When you take a highly volatile asset that has a very low to no correlation to other asset classes, what ends up happening is you actually reduce the overall risk of your portfolio, right? Because you're taking a highly volatile asset, you put it in, you reduce overall risk of your portfolio, and it's got asymmetric return profile. So if normally
could 10x.
Well, your speculative investments, let's say normally you would put 100 basis point, allocation. With this, you could actually put 25 or 50. So you can put less money in and get the same impact on your portfolio.
Interesting.
And so we've gone around the country talking to institutions, and the whole message is just get off zero. I don't know what number you should have on allocation.
Yeah.
Zero is probably the wrong one.
It's interesting. Yeah.
Do you disagree? I'd love for you to disagree.
I sold half my I sold half my Bitcoin at about 8,000, and then I just
on the way up or down?
On the way up.
Oh, okay.
And I was just like, I'm going to take it off the table.
This is what I told everybody. I mean, I spoke at that crypto thing in Santa Monica 2 years ago at the peak, and I just said, listen, I've been through this so many times. And because of the Uber position, I was going through it at the time. I said, listen, I've had these like long existential thoughts. And I was already a millionaire when I had the Uber investment. So it wasn't like I was like these crypto kids who would literally have no cash in their bank and have $10 million in crypto.
Crazy.
Yeah.
And I'm like, okay, let me just explain something to you. Sell half. Buy a house.
Yeah.
Put everything else in municipal bonds, munis, index funds, and sleep well at night.
Yeah,
you will never regret it.
Never regret it.
Put $5 million in the bank, you're gonna make $100,000 for the rest of your life every year.
You're done.
Right.
That's
Yeah,
right. You're done.
You're done.
Yep.
And they didn't do it.
Yep.
Yeah.
And I said, listen, what is that expression you have? Like pigs get slaughtered, pigs eat, hogs get slaughtered. There's some expression.
Yeah. Basically, greed leads to bad outcomes.
You don't want to get too greedy. Right.
And lessons are repeated until they are learned. So we as veterans of the first crash and second crash, it's like, man, I'm taking a half off the table, and I'll be very happy with that.
It's like people are. I told people I sold a little bit of Uber to Masayoshi Son because I wanted him on the cap table. That made a tremendous amount of sense to me. I'm long the company, but if you sell a little bit and he owns 10% of the company is now worth 30% more.
Let me ask you this: what do you think about what he's doing?
In what way?
Just he's got a lot of money and he's playing kind of index type strategies. So he goes in and he does a bunch of ride sharing.
I think he's going to double the money.
You think so?
I think it may take a decade.
Yeah.
But he will be vindicated and double the money. Now, there will be a spectacular flameouts. He will put 200 million or 100 million into a dog walking service or something that the automated pizza robot, which I know them, they're fantastic people, but I don't understand that investment exactly. Like, it's too much money, back to the ICO thing. So there's going to be that. But he's so smart of picking winners that the winners are going to be 10Xs and the losers are going to be washes or half back, whatever, 1-to-1. And Yuri Milner did the same thing. Every 5 or 10 years, somebody does this in Silicon Valley. They come in, everybody's set the table as here's how things are done. And Mark Andreessen and Ben Horowitz came in and they started paying double the Series A prices. It led to Quirky and Zenefits and all kinds of weird stuff. They made they put too much capital behind companies and it literally the alignment on the car wasn't well and they put jet fuel into it and the car just flips. It's oh, okay, we got to be a little more considered. So of course, Andreessen Horowitz has been more considered in how much money they put in and not trying to win every deal. When they came out, every venture firm hated them because they were just, I'm sorry, how much is Sequoia? How much is Benchmark? Okay, we'll double that. Now they're wait a second, what's the actual opportunity here? Well, Yuri Milner did the same thing. He came in and he's I'm sorry, what do you all want to pay for Facebook? $5 billion? I'll make it 8. I'll give you $1 billion. Because all he's thinking is, I got this oligarch's money. He had an oligarch who gave him money in the initial thing. He's if I double it, I get 20%, 200. When you double a big number. So that's what Masa's doing. What if Masa just turns 100 into 150?
I was going to say,
that's 50 billion in gains. That's 10 billion in profits.
For your portfolio as an angel investor, if you 2x your money, you'd probably be pretty disappointed.
I would kill myself. No, I had somebody return 9x and I was livid on the phone with them because I was you're selling for 30 million?
But if they can 2x $100 billion,
yum.
That's a pretty big deal.
What if they 1.5x it? 20% of 50 billion? What if they 1.1 it?
The best part about him...
That's $2 billion. If you 1.1 it, you get $2 billion.
Yeah, the best part about his story is I think a lot of people generally know, he was one of the richest men in the world during the .com. Yeah, something like that. But he invested in Yahoo, GeoCities, Webvan, and then
all that.
They all bought each other and it deals with each other and all this stuff. And everyone else, when you lose 90+% of your wealth, would go home.
Oh, you crawl up in a ball.
And he came back just no fear.
Listen, being a high stakes poker player, I've been through this experience where you lose $70,000 in a night and you come back the next night and win $150,000. You really find out what you're made of when you lose. I lost 70. I shouldn't talk about this because I lost $70,000 in a game once. Previous biggest loss was maybe 10 or 20. And I was an up poker player. My wife was go back tomorrow night. I went back.
Can you say who you lost it to?
It was an LA game. It wasn't an internet game. A studio head, a director, an actor, and then a bunch of other folks.
Yeah.
I calculated, because when you lose that big and you haven't done it before, you're going to go mental. I was up for 4 hours calculating. I had lost 8 all-ins. 8. And you don't usually go all in 8 times, but I had 8 all-ins, and of them, I was up 60, 70, 80% winner in all 8. I lost all 8. And I started doing, I was wait a second. Okay, so 50-50 chance. 25, even if they were just coin tosses, to lose 8 in a row. And people at the table really felt bad for me. They were just oh. It was really nasty. And I think I got to push on one of them, we chopped the pot. But 50%, right? The first hand, 25%, 12, 6, 3, now you're under a percentage point. And I was it was 0.3% chance that this happens. I was have you played 300 games of poker? I was I paid 600 games.
That's why he was invited back the next night.
Well, I came back the next night.
And then you cleaned up.
Yeah. Same lineup.
Oh, that's great.
No. So they're all just beating me up. I get to the end. I have top pair. I'm up against the best player of the game. And it's the last hand. It's 5 a.m. I'm up $50,000 or $60,000. So I'm basically at even. So I'm feeling pretty good about it. This guy decides he's going to test me. He's got the second best pair. I have the top pair. It's a king or something. But this is not a strong hand. People don't realize, in a game where you're playing for $50, you can shove in $50 for a king high. You can't shove in $60,000 in the last hand of the night at 5 a.m. after you've been playing since 5 p.m. This is a 12-hour session. It's 5 a.m. We've been playing since 5 p.m. I remember it's yesterday. I raise, he re-raises, I raise, he shoves it all in. Like, and I'm sitting there and I'm like, okay. And I say, I just need a minute. I'm thinking to myself, I am going to be down $130,000. I could be even if I just, and I'm like halfway in the pot. So I'm like, okay, I could be down because I already put like half my money in. So I'm like, okay, I got 40,000 in front of me. I could leave now with 40. Then I'm stuck 30. Or if I call him is all in and I win, I'm at $180,000. I'm up $100,000 because I bought him for 10 or 20 grand. So I'd be up like $90,000 net the 2 sessions. Fuck, what do I do? Oh, wait a second. This guy's an aggressive player. He knows I lost yesterday. He's bullying me. And in my mind, I just thought, it's 5 a.m. He knows that was a tough loss for me last night. He must be leveling me and just pouncing on the fact that I am so beaten and so broken like Masa was. And I was like, I call. He's like, good call. Throws his cards in the muck.
Wow.
Well, you're talking about you're playing with people who, the thing about playing LA games, you're playing with people who never earn their money in large part. These are celebrities, directors. Like somebody's like, you're worth $20 million in a movie. You're worth $3 million as a director, direct 3 films a year. And they just ship them a bunch of money. They're like, okay. Here, like people value money. They're like have funds, like they're quants. Like it's a whole different, when you play the New York games, forget it. These are quants out there. Like they're playing a different way. Like those people are loosey-goosey and they're playing with like aggression and leveling like Toby and these guys, like they're just playing to beat people, like for the fun of it. Like I played with Tobey Maguire a couple times and he's like, I think he sadistically wants to watch people suffer. Like that's his thing. I think he just wants to like, cause he will turn over his cards and show the bluff.
Look like it.
Oh no. I mean, he's a cool guy, but all right, listen, Pomp, we finally got you on the podcast. I hope it was everything people hoped for. Unfortunately, we agree on so much.
People are going to be disappointed.
So much. You're welcome to come back anytime. You're well spoken. You did a great job. And Mick, you too. Congratulations on the book.
Thanks.
Take a moment to Google "She's Building a Robot for Me," please. Yeah. Do it right now while it's front and center in your mind.
Young women in tech is 3 guys on a podcast. We can say
we need more mail-splain and white-splain that you
Badly.
need diversity, and we are going to mansplain it to you. But I have 3 daughters as well. And I think this is one of the, daughters make you.
I got 2, you one up me. You got 50% more daughters than me.
Exactly. Well, I'll tell you something. It does put all these issues front and center in your mind, and it does make you want to see the world change that much more.
Totally.
I wish I could say, you have kids yet or no?
Nope.
Married?
Yeah.
Nope.
Oh, look
Best
at
thing
you.
you'll ever do.
Look at you.
I have a beautiful girlfriend.
He's single. Okay.
Beautiful girlfriend?
Nice,
Okay. She trade crypto?
No.
She's got
She a hodler?
No.
She bought Ripple? Oh, God. Oh, no. Thanks again, Capterra, Kruze Consulting, and LinkedIn. Love you.
My wife works at LinkedIn, so I love LinkedIn too. So
Isn't it great?
she's awesome.
I've been posting my the show to LinkedIn. I get such great feedback. Jeff,
It's very
I asked
different.
you like 10 times. Listen to JCal. 10 minutes? Give anybody who's part of the influencer program the ability to put up an hour video. People will hang out on your platform for an hour. They cap it at 10 minutes per video. I'm like,
They will. They'll definitely stay.
Yeah.
oh my God. We put it up in 6 parts.
Yeah.
And then all of a sudden we get 1,000, 2,000 views per part. And you're like, wait a second. People are watching videos on LinkedIn. It's like, yeah, they are.
Because the algorithm, they were boosting the videos for a while. And so all of those like Business Insider type, with the words over top of it, they all exploded on the platform.
Now I'm just putting the whole podcast up there. I'm like, listen, if I get you for 10 minutes, if they listen to just one part of this, now they know what This Week in Startups is. Great way to...
Crazy plug. I'm working for a video AI company.
Great.
It watches the video and actually uses AI to produce 100 versions and then optimizes it on the fly. It's called playable.video.
Oh, cool.
But-
Does it do deepfakes? Is it like...
No, it does. But basically just creates multiple versions so you can A/B test videos.
I like that.
Yeah, it's awesome.
Because the big thing is in the first like 3 to 5 seconds, people either decide they're going to watch it or not.
For sure.
Facebook,
So if you can
first
do
3
all kinds of
seconds,
stuff.
massive drop off.
Yeah,
and
it's super smart.
Create 50 versions.
Yeah. All right. We'll see you all next time. Bye-bye.
Thanks, group.